everyone, it's Jordan Robertson with Benzinga, and joining me today is Edmundo Gonzales, co-founder at Marpai. How are you?
Very well, thanks. Good to be here.
Amazing. So to get us started today, can you give us an overview of the company?
You bet. So, Marpai is in the business of predicting and modifying risk in healthcare. What that means is that we manage hundreds of health plans for employers around the country. We basically help businesses around the country, as well as local government agencies like school districts, for example, or a town. We help them get control of their healthcare spending, which is often the second largest expense for any employer outside of payroll. All of our clients have been seeing the trajectory of healthcare only have one direction, which is up, up, and up. With us, we can really help them bend that cost curve over time in a way that they can provide great benefits to their employees while also controlling their own costs. At the end of the day, Jordan, healthy populations cost less. That's what we do. That's what we deliver for our clients.
Amazing. And how is the Marpai healthcare insurance plan different?
Well, we're different in that we don't just pay healthcare claims. We actually look at the health of our members. Members are basically employees as well as dependent children and spouses of employees that are employed by our clients, who are all self-insured employers. What does that mean? Self-insurance basically means that a business says, you know what, I'm not going to buy the traditional health insurance. I have enough employees where I'm going to self-insure, meaning I'm going to pay for my employee's visit to the hospital or to their doctor as it comes. But as you may know, paying a medical claim is not like paying the light bill. There's art, there's science, there's a lot of complexity. That's where we come in. We make it very simple for businesses across the country to basically self-insure, get often 25 to 30% savings versus the traditional insurance, but we manage all of that benefit. We take all the complexity out for our employer clients. That's really the difference. And the other big difference, of course, is that we're looking at the health of the populations we're lucky enough to serve. So we are in front of health events, which are with our own care management, with our own nursing staff, to make sure that the populations we serve are making the best choices for their own health. Again, healthy populations of employees cost less.
Wonderful. And how do you use AI and machine learning to reduce costs of third-party admin of company health plans? And also, what sort of efficiencies are you finding that did not exist before?
Look, so AI is impacting everything, right? It's impacting healthcare, it's impacting so many industries. We were actually born as an AI startup. And along this journey, I decided essentially to buy our client. That's how we got into managing health plans. We wanted to do this because we wanted to access big populations at scale very, very quickly. That's why we went into the administration business. But AI, basically the most pervasive use of AI and the most high impact use is really in looking at the actual populations we serve, in predicting where a member is going to be or where a member is going with respect to his or her health journey, and then getting in front of it, meaning having, again, a nurse or another clinician contact that member and making sure that that member is in the best care possible. We are also matchmaking our members to the best providers out there. There are in-network providers for networks that we work with, like Aetna, Cigna, as well as a whole host of smaller regional networks, but also even our own network of value-based providers. We are very good at identifying a member that may benefit from a specialized provider. For example, one that may treat and reverse, in many cases, type 2 diabetes, or one that may treat musculoskeletal issues. We are the matchmaker. We're in the middle, and we are bringing these innovative solutions to our members, making sure that they're actually in the program, staying in the program, and then, of course, measuring everything, because our clients want to make sure that the programs are working. And working for us means two things. First and foremost, the most important thing, are health outcomes improving? That's what we're all about. But also then, if they are my costs going down as a self-insured employer? So measuring that over time with our ecosystem is very, very important to us.
Absolutely, that's fantastic. So you just launched your Vitality Plan aimed at smaller employers, a market that has nearly doubled since 2011. What makes this an ideal solution for employers of this size? And do you see this rapid growth of smaller employers opting for self-funded programs continuing?
I do. So let me answer the second question first. So smaller businesses now, of course, after the Accountable Health Act, also known as Obamacare, smaller businesses now have to have insurance, right? This is businesses that are 50 employees and above. Now, that has brought a tremendous amount of businesses into the marketplace of health insurance, of healthcare. Many of these businesses before did not have to offer healthcare to their employees. Now, what does that mean? They have gone and bought traditional health insurance from the big insurance companies. The issue with that is that they're phenomenal products, but they're very, very expensive. So smaller businesses that are, say, between 51 and 100 employees often find it cost prohibitive to buy traditional insurance. That is what's fueling the growth of small businesses, are fueling the growth in our space, which is self-insurance. Traditionally, by the way, meaning 20 years ago, this was a space for larger businesses. So if you had 500 employees, of course, 5,000, 50,000 employees, of course you were self-insured because you're big enough to have essentially a little insurance pool within your employee population. But now that the dynamics really exist for smaller businesses of 70 employees, 80 employees. This is very, very exciting. What we've done with Marpai Vitality is basically put everything in a box, if you will, a virtual box. So we make it easy for smaller businesses that may not have the human resource infrastructure or big departments. Again, they're smaller businesses. We make it easy for them to become self-insured. And we provide everything that they need, access to the best networks, obviously all of the claims processing, the customer service that their employees deserve. We put everything together and make it very easy for their employees to onboard into our program. That's what Vitality is all about.
Yes, absolutely. And last question here for you. What should investors be watching out for in Marpai's future?
Look, in the near future, and this is already coming to pass, we are we're on a journey to become profitable in 2024. We're a young company. I only started this a few years ago. We're almost at $40 million of revenue. That's from zero, literally a few years ago. So we've been on quite a rapid growth path, and we have accelerated our pace towards profitability because that's what the market wants, and we agree. So you'll be seeing in our earnings calls quarter after quarter our adjusted EBITDA, which takes away the effects of restructuring from companies that we have purchased, the severances, leases, all of that. And it really gives you a window of to what profitability looks like in the near future. You should be looking at that quite intently and looking at the EBITDA loss get smaller, and then obviously switching to the other side in 24. Everyone in our company is very, very focused on this. And you know what? Even at our scale, it's very, very achievable, very achievable.
Well, big congratulations to you guys. That's all I have for today, and I hope to see you back real soon.
Thank you so much, Jordan. My pleasure.